Right now, Adobe trades at its 52-week highs. Is Adobe stock a smart buy right now? That's the big question we're tackling today. Welcome to Global Value, and in this video, we're going to dive deep into a thorough analysis of Adobe ADBE stock, emulating none other than Warren Buffett, one of the greatest investors of all time. We'll scrutinize the key numbers that Buffett values most, and then we'll calculate 3 different fair values for Adobe to really understand what it's worth in today's market. Make sure you stay with me till the end because our combined fair value and rating might just take you by surprise. So is Adobe a picture-perfect opportunity waiting to be seized? Let's find out together. Right now, Adobe stock trades for $619.48 per share. 2023 has been phenomenal for the business. Their stock price is up 84%, which beats the market. They blow the S&P 500 out of the water, even though it's up 19%. In the last 5 years, Adobe has compounded at 21% annually, beating the market for much of this time. In the last decade, they've compounded at 26.5% annually. They're one of the best performing stocks over this time frame. When we go back before the global financial crisis, in the last 18.5 years, Adobe has compounded at 17% annually. Really, since 2013, they have huge separation with the market, which they're beating over this time. But the burning question is, why should we be paying close attention to Adobe? Today, Adobe trades closer to the levels of their all-time highs, which they hit in November of 2021. The company trades nearly double its 52-week low. Still, there's not a lot of short interest in the business. And how big is Adobe? They're huge. One of the largest software companies in the world, they have a $282 billion market cap. You've probably used their products, but what does Adobe actually do? Adobe provides content creation, document management, and digital marketing and advertising software and services to creative professionals and marketers for creating, managing, delivering, measuring, optimizing, and engaging with compelling content, multiple operating systems, devices, and media. That's a mouthful, and the company operates with 3 segments: digital media content creation, digital experience for marketing solutions, and publishing for legacy products, which accounts for less than 5% of total sales. Now with that understanding, let's dive deep into their numbers like Warren Buffett by using the Select 6 analysis. Starting with metric number 1, we want Adobe's average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. When we look for a benchmark that's double this, we can build in margin of safety based on the quality of the business. Adobe's returns on capital were great over this time, and they've gotten even better. A big shift happened for the business as they transitioned into a software as a service model. With this and the boost they saw during the pandemic, their returns on capital have improved to 32.5% in 2022. These are up from 21% in 2018. They've grown in each and every year over this 5-year time frame. When they're averaged out, Adobe earns 26% returns on capital in a given year. That's nearly 4 times better than a normal business. It's close to double our benchmark. This is a huge check on metric number 1 for Adobe. Metric number 2, we want growth in their sales, earnings, and free cash flows to support their high returns on capital. In this time from 2018 until today, Adobe has doubled their revenues. Their earnings have almost doubled as well, and their free cash flows have doubled. This is huge growth across the board for Adobe. They've grown pretty steadily and consistently over this time. Some of their sales were pulled forward in 2020. Still, the company's growing since then. All 3 of these are up. It means it's another check on metric number 2. Metric number 3, we want earnings per share growth. This looks at Adobe from the view of an individual shareholder. In our last metric, we learned Adobe almost doubled their earnings. Their earnings per share have more than doubled. This comes from Adobe buying back 7.5% of their shares over this time. With fewer shares outstanding and more earnings, Adobe's earnings per share are up. It's yet another check on metric number 3. Adobe's perfect so far. Can they keep this strong performance going? In metric number 4, we want Adobe's free cash flows per share to have grown in the last 5 years. This is pretty similar to our last metric. Adobe's free cash flows have doubled, and with these share buybacks, their free cash flows have also more than doubled. This is a check on metric number 4. Adobe's still perfect. In recessions, it's businesses with too much debt that can have the biggest losses and even go broke. In metric number 5, we want the sum of their free cash flows in their last 5 years to be above their net debt. Adobe's done a good job of managing their debt levels over this time. In their last 3 years, they've had negative net debt, meaning they're left over with cash after paying off their debts. Today, the company's sitting on $3.4 billion in cash after covering those debts. Adobe's brought in increasing amounts of free cash flow over these last 5 years. When they're added up, Adobe brought in $27 billion over this time. It's great the company has a cash cushion and they generate a lot of free cash flow. It's exactly what we want to see. This is a check on metric number 5. Adobe looks like it's in strong financial shape. Flawless through our first 5 metrics, does Adobe have what it takes to go 6 for 6 on our analysis and be a perfect select 6 stock? Why don't we find out? The big metric of them all, metric number 6, we want Adobe's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, it gives a slight risk premium to the yield of the 10-year treasury. It's the first of 3 of our different valuation methods. Right now, Adobe has around a $279 billion enterprise value. This adds their market cap and their cash cushion together, looking at Adobe like a private business. In the last 5 years, we learned they brought in $27 billion of free cash flow. This means they bring in $5.5 billion in an average year. When we divide that by their enterprise value, we get around a 2% average free cash flow yield. Currently, Adobe brought in $7.6 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, it gives us a 2.7% current free cash flow yield. These both come in lower than the 10-year treasury. They're down from that risk premium. It means all the way on metric number 6, this is our first and only X of the day for Adobe. Don't just throw the business out. Watch what our other 2 estimates are before you stay for their fair market value and rating at the end of the video, which may just surprise you. Now we're going to use a discounted cash flow valuation to estimate Adobe's fair value per share. This is based on their business predictability, which Adobe has been very predictable in their past. We'll start with their current free cash flows and use growth assumptions to project these into the future. It's up to you to figure out if they're accurate or not for Adobe. If we assume they grow their current free cash flows at 15% annually in the next 10 years, then in the following decade, in each of these years, we'll assume those grow at just under 13% annually. We're also going to add in Adobe's tangible book value to give an estimate of their net worth. Again, it's up to you to figure out if these assumptions are accurate or not for Adobe. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, an estimate of Adobe's fair value per share is only around $318. Why is that so far off from their stock price? A lot of this has to do with the high valuations that Adobe trades at. Right now, they trade at a price-to-sales ratio of 15 times. In the last decade, they traded for a median price-to-sales of 11 times, which is still very high, but Adobe's had the growth to back it up. Their price-to-owner earnings has been more across the board. Right now, they trade for 48 times this multiple. Their median is 42, but they've swung all the way down as low as 16 times. Their multiples have expanded over time, which as a company gets bigger, its growth is more likely to slow down. This may mean that their multiples contract over time. If this is the case for Adobe, this may be a headwind for the business going forward. It's less likely their multiples would continue to increase and benefit their stock price. We're also going to use a guru focus value for Adobe. This uses their business predictability, growth assumptions, analyst estimates for their future, and where they've traded compared to their past to give a fair value. Looking at their valuation chart, Adobe looks like it's stretched beyond most of those valuations. It's quite a bit ahead of most of the ways of valuing a stock. Still, this isn't financial advice, and you need to do what's right for you personally. So far, we've covered most of the numbers that Warren Buffett cares about, but it's the qualities of a business that are even more important to him. Why don't we learn what these are for Adobe? We're going to start with a long thesis first. Number 1, Adobe is the de facto standard in content creation software and PDF file editing, categories the company created and still dominates. Number 2, shift to subscriptions eliminates piracy and makes revenue recurring while removing the high upfront cost for customers. Growth has accelerated and margins are expanding from the initial conversion inflection. Number 3, Adobe is extending its empire in the creative world from content creation to marketing services more broadly through the expansion of its digital experience segment. This segment should drive growth in the coming years. But it's not all sunshine and roses for Adobe. Let's look at a short thesis as well. Number 1, momentum is slowing in Creative Cloud after elevated growth driven largely by the model transition to SaaS. Number 2, there's greater uncertainty in the digital experience given that this is an emerging space and one that Adobe neither created nor dominates today. Growth could be slower than anticipated and/or margin expansion may not materialize. Number 3, digital experience has been built largely through acquisitions, including Magneto and Marketo in 2018. This raises the possibility of disruption from inadequate integration efforts and lends credence to concerns that Adobe may overpay for increasingly large deals. Investors got a first-hand worry about that for Adobe's $20 billion deal to acquire Figma. Right now, the Department of Justice is preparing to block this acquisition. Still, it came for a huge multiple of nearly 50 times Figma's sales. While it may benefit the company if their deal goes through, this is still a ton to pay for the business, and it seems like Adobe is still playing catch up in some key segments of their business. Now let's figure out what Adobe's worth in today's market by combining their numbers and their qualities. This far in our stock analysis of Adobe, we've learned that they go 5 for 6 on our Select 6 analysis. They have the majority of signs of being a wonderful business. They're only off when it comes to our valuation multiples. Right now, they don't look attractive compared to the 10-year treasury. Perhaps because of their valuation, Warren Buffett and no one at Berkshire Hathaway owns Adobe, but these 9 super investors do. Adobe's a decent-sized position for Poling Capital Management, Berkshire Hathaway director Wally Weitz, and Hillman Value Fund. In 2023, 2 notable super investors sold out of their positions in Adobe. Chuck Akre sold his entire position in Q3 2023, and Terry Smith, who's been called the British Warren Buffett, sold his position in Q1 of 2023. When we put everything in our analysis together, right now it looks like Adobe has a fair market value of around $408 per share. This is down $211 from their current stock price. Adobe traded at these levels not that long ago in May of 2023. Since then, they've really beat the market and their multiples have gotten even higher. Adobe's fair market value comes in quite a bit below their street target price of $601 per share. Still, it's well within where they've traded in the last 52 weeks. Based on this analysis, right now it looks like Adobe is overvalued. If you enjoyed today's Adobe stock analysis, subscribe to the channel for more and watch this next video.